Bitcoin and Ethereum holders are reluctant to sell their coins. This is supported by on-chain metrics that is showing that people are really hodling at the moment. The NFT market is going absolutely insane, and all coins seem to be heating up after a small dip over the last few days. Ethereum's absolutely breaking out. I'm going to share the Bitcoin and Ethereum charts as well as all the news that is driving markets today. Stay tuned. Let's go.
Let's go.
What's up, everybody? I am Scott Melker, also known as the Wolf of All Streets. Before we get started, you know that I have to, by contract on YouTube, ask you to subscribe to the channel and hit the like button. If you don't do that, you're going to get banned from YouTube. Everybody knows that. It's science. So it is 9:30 today. I usually do this at 8:30, but we're pushing back an hour, checking that out and seeing how it works a lot easier for my lifestyle. As you guys know, I'm giving away $5,000 in crypto when I hit 100K subscribers, hopefully sooner than later. 10 prizes of $500 in Bitcoin and Ethereum. All you have to do is subscribe to the channel and hit the link in the description right down below. As I said, on-chain metrics are showing that Bitcoin and Ethereum hodlers are reluctant to sell. But first, I'm going to take a look at the charts, and then we will dig into all the news. First, we have coin market cap right here. As you can see, starting to see a whole lot of green, and Ethereum is popping. I shared this on Twitter yesterday saying that Ethereum Bitcoin looked like it was ready to break out. There was a lot of bearishness, but we'll look at the chart, and I'll show you why I continue to be bullish. Solana still continuing to go up. We made a video yesterday about Solana hitting $100. It's $125 already today, 24 hours later. You can see that things are starting to boom. Very bullish for the market. Let's take a quick look at Bitcoin. As you can see, we have the monthly close in 10 hours. Absolutely huge monthly close. We're flipping the EQ of this ascending channel back to support. 1, 2, 3, 4 tests of this EQ as support. That gives us a target at the top of this channel, 6-figure Bitcoin. Down, up, down, up, down. You could not have a cleaner channel than this if you tried. The weekly, yeah, we had this hanging man last week. We'll have to see how this candle pans out. No surprise that we were rejected here at the 23.6% Fibonacci level. That's of the move from 3,800 all the way up to 65,000. Will be interesting to see how the weekly plays out, but for now, not particularly concerned. On the daily, as you can see, still trading right around the center of the Bollinger Bands right here. Actually, now, if you look really closely, it appears that that has now flipped from support to potential resistance. Actually, we're just above it, but we definitely want to see candles continuing to close, or else you start looking to the lower band right here around 44,308. You can see the bands are tightening again, which means that the tighter they get, the more volatility we will expect. I still have a bias that maybe we bounce off the bottom if we do come down, or hold this and then we see the next break continuing up. I see no reason for us to make major moves down unless it's just for a quick retest of this key 42 area we've talked about so many times that you're probably sick of hearing me say the words 42K, 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 42K. Listen, a lot of people are talking about 40 to 43K, that whole region. It would be a really reasonable, healthy retrace to get down there, but no reason to believe that it's going to happen yet. As you can see here on the 4-hour, not that exciting. This line, we can almost get rid of that line on the chart, I think, at this point. But basically, this is just a whole lot of sideways chop in this area. I pulled this line on here because you can see that it was resistance, support, broke, sort of resistance, really clean support through all these areas, major breakthrough. And once again, now we're seeing it as resistance. This demand zone is continuing to hold, but frankly, there's just not much to see here. This is sideways chop. We could draw a line here, but I can't imagine trying to trade this at the moment. I think at this point, we're really going back to like the daily. We want to get kind of above this 50, start closing candles above it. Then we can start talking about higher targets. Otherwise, I'd be more interested in buying a dip if it does happen, not saying that it will. Really nothing to see here on Bitcoin, which means there's probably something to see elsewhere, right? Right. Ethereum, Bitcoin. I've been sharing this descending wedge for what feels like weeks, maybe weeks, definitely for at least 7, 8, 9, 10 days. This is a bullish pattern. Even if price is dropping in the wedge, eventually you expect to break out to the upside. Well, we've seen that with a Mayhor strength, right? Clean breakthrough here on increasing volume. We have volume continuing to increase majorly today, right? We have 10 hours left in this volume candle. It's almost as much as yesterday already. Very, very bullish. Above the EQ. To me, this Ethereum Bitcoin chart screams that we're going to the top of this range. ETHUSD, Been saying it for days. 1, 2, 3, 4, 5, 6 tests of the previous range as support, right? We had the major drop, accumulation, price breaks out of the range, should not be trading back in, created this local resistance right here. 1, 2, 3, 4 candles. These broke through. This one, well, finally we're seeing breakthrough. We need to see this close above, and then the idea that I've been drawing, we can start to see play out. But honestly, I think we're on the path back to the highs at 4,400 here with Ethereum. This looks good. And as you know, if Ethereum pops, that usually means the rest of the altcoin market will pop with that. We will take a look at that on future live streams in the coming days. Now let us dig into the news. On-chain metrics show Bitcoin and Ethereum holders are reluctant to sell. Delving into patterns revealed on-chain can offer insight into wider market sentiment, and it appears that Bitcoin and Ethereum holders are still reluctant to sell. I mean, I think we all know that, right? But there's been this sort of major divergence that people have been talking about. And the fact that we've had all these gains in price, and the price has basically held up there, but there's actually been a relatively large slowdown in on-chain activity. You can see Glassnode tweeted about it right here. What they're talking about is this constructive hodl waves. I'll just read this to you. Glassnode reported that both Bitcoin and Ethereum hodl waves have been in a clear downtrend for the past 4 months. Coins younger than 3 months are likely to be spent during volatility. That makes a lot of sense, right? Brand new coins go into weaker hands and they get spent all around the market and traded. Falling hodl waves for these young coins indicates that the market prefers to hold the assets rather than spend them. Young BTC now represents only 15% of the coin supply, and a very strong downtrend is in play. Same with the Ethereum chart, which is at 12.5% of the circulating supply. A powerful uptrend in coin maturation is in play for Bitcoin, with almost 50% of the coin supply aged between 3 months and 3 years. And then the other on-chain metric they're pointing to show the hodl and bullishness is non-zero Bitcoin balances. When there's a lot of volatility, a lot of selling, a lot of new wallets obviously sell, and then they lay there as dormant wallets with nothing in them. Well, that's not happening now. We're seeing more non-zero Bitcoin addresses increasing. There are currently more than 38 million Bitcoin addresses with a balance, which is close to the all-time high from May. Same has occurred for Ethereum, which has made a new all-time high of 60.7 million addresses. That means that people are opening wallets and keeping at least some coins in there. They are not panic selling everything and not coming back. Very bullish. Bitcoin-friendly Robinhood may have to abandon main revenue stream. Yikes. SEC Chairman Gary Gensler told Barron's the SEC could ban payment for order flow. The hits just keep on coming for Robinhood, who is not really Robinhood. Let's be real. They're not stealing from the rich and giving to the poor. No, they are not. But the problem is their payment for order flow. That's how they make most of their money, basically meaning that they take your order, they don't fill it themselves, and then somebody pays them for the order flow. A bigger house buys all those orders for them. They fill those orders and they make pennies on the dollar to do so. Well, if that practice is banned, Robinhood basically has no business. And keep in mind the fact that Robinhood's business is now 40% crypto, and 60% of that in Q2 was Doge alone. So what if interest dies in Doge or slows down? And what if this payment for order flow is banned? Robinhood is screwed. They will be deader than dead. So keep watching for that. Blockchain.com has processed 1 trillion in crypto transactions. CFO reveals IPO plans. Now, they've been around for over a decade, I believe. Blockchain.com, formerly blockchain.info, one of the OGs of the crypto industry, announced today that as it nears its first decade in the market, it was able to process 1 trillion in crypto transactions. $1 trillion in transactions. And this isn't even one of the larger platforms that we talk about. This should show you how much this market has grown over time. Absolutely astounding. So, of course, what are they going to do? They're going to try to IPO. Now, moving on to the NFT space. Holy wow, what the F is going on? Three Arrows Capital bets big on Ethereum NFTs with Starry Night Fund, aptly named after Vincent van Gogh's famous painting that's hanging on the wall of every late teenage girl who's ever gone to college in the history of mankind. The firm has teamed with noted collector Vincent van Gogh to buy pricey NFTs with its Starry Night Capital Fund. I guess it makes sense they would partner with Vincent van Gogh. I mean, if you show somebody on Wall Street or like my mom and dad this headline, they would probably laugh. They've partnered with Vincent Van Gogh to buy millions of dollars worth of JPEGs on the internet. But hey, man, that's where we're at right now. And clearly, NFTs are the key focus of many investors, traders. I mean, the guys who are like 100x leverage trading Bitcoin and who are flipping altcoins, now they all have Pudgy Penguin avatars on Twitter and are showing off their NFT collections. It's just been a fundamental shift in what people are focused on in this market. But this should show you that this is probably not going anywhere. These guys don't swing huge amounts of money into something, create a fund if they don't believe that it's serious. They have bought, there you go. It acquired an Art Blocks NFT for $5.66 million on Friday, a new record for the surging generative artwork collection. Also, I believe I saw on Twitter rumors that Alameda Research, Sam Bankman-Fried, they bought a whole lot of expensive NFTs yesterday. So clearly, this is not going anywhere. Just for me, not in my wheelhouse, and I have no idea. I have no idea when this is going to end, but somebody's going to be left holding the bag on 99% of this stuff. I have a feeling that this higher end ones with scarcity, the punks, things like that will retain their value, but almost all of these knockoff projects are going probably to zero. Here's another one. Rare Pepe, steeped in Bitcoin history, fetches $500K on NFT market. OpenSea. Frog-themed digital collectible cards from mid-2010s are getting retooled for fast sales in the white-hot NFT market. Somebody took something that wasn't an NFT, said, I'm going to make an NFT out of it because it was cool, and selling it for $500K immediately. That should tell you all you need to know about this bubble. These are all very cool, but they weren't even created as NFTs. Absolutely nuts what's going on. Finally, MetaMask surpasses 10 million monthly active users as DeFi continues to surge. 10 million active monthly users on MetaMask. This should show you just how much DeFi NFTs this space has grown. Demand for non-custodial wallets continues to surge amid the DeFi and NFT booms. MetaMask has been a primary benefactor as active monthly users have grown 19-fold in over a year, just over a year. 19-fold in just over a year for MetaMask. 10 million monthly active users is way beyond our core crypto community, right? I figured crypto Twitter might be like 2 million, 3 million people. We have 10 million people using MetaMask on a monthly basis. That means that the mainstream is here, retail is here, and all these normie people that were probably trading Doge and doing all these things are starting to look at DeFi and NFTs. This space, this market is absolutely booming. The mainstream is here. We have a lot to be excited about, guys. That is all of the news that I have today in the charts. I will be live streaming today at 1:30 p.m. EDT with Sean from high.com. They're an absolutely cool new project. We're going to do an AMA, so you guys should show up for that. You can ask them any questions that you might have. Again, I'm doing the giveaway, and you can subscribe to the newsletter, do a lot of things down below. Once you smash or tap or do the like button here. Robinhood or Rob in Hood, the Robin the Hood. Clever. That's clever. Yep. And that's about it for today, guys. I have a lot coming. Like I said, show up at 1:30, and tomorrow I'll have my normal Chartapalooza at that time. Until tomorrow, my friends, or actually till later this afternoon, but then tomorrow, and then the next day. I'll see you. Peace.
Let's go.